Hello traders, this is your trader's friend. Thank you for joining me today for another video. I am so glad you could be here with me. Guys, just want to share a new strategy that I'm trying out, and I suggest if you try it out with the minimum amount of your live account, or either do it on a demo and do it for at least a day or maybe a week until you become comfortable with the whole concept. This is the Euro USD on the 1 minute time frame, and a lot of times we have swinging market, and what you have before you is the Euro USD on the 5 minute and the Euro USD on the 1 minute. I wanted to show you both so that you can kind of see where our trend is going. On the 5 minute time frame, you can see that we are clearly in a bearish trend, and you can see the difference. This is our daily resistance, daily support. This one I think came from the hourly time frame. I know the red ones, this was where we were hourly way this morning, and then we were between this trading range for a while last night, early this morning, early European session. So that's what that is. And you can see here that it's been a method that I've been using in on the 10, kind of out on the 10 thing. But one of the things that I've been doing in the 10, and it makes your stop loss much tighter, is I have been moving, and you can see where it was that I was in the last trade, where I was moving my stop loss above the previous candle, and I got out on this candle because we had such a huge drop and I had enough profit. But this is the thing, if you choose to trade this method, and this is actually yesterday's level of support. This was the support level on the hourly time frame before you got here, and you see we've fallen through yesterday's support. So that's what all that is. And again, this was my moving stop loss, this yellow this little yellow line. But this is the thing, if you find yourself in a good run, and at least this is what I'm finding in this method, once you find that you have had a good run, and you can see that this is from the high here is 142.68, and you can already see that we're in a bearish run, and the low down here is 1.4197. Now this is the thing, once you get a good run like that, you want to wait for a little while, because usually what you find is once you have a run, you get into this kind of, and this is a better example of it, you get into this kind of choppy price action before you can get another little tiny run. But once you get a really good run, then it's best to wait a few minutes to see if you're going to resume that same trend, or if you're going to get a bounce. So here you have a little bounce, chances are it'll move up and down, but you can see that overall you're in a bearish trend, and it actually may reverse on you. But this is the thing, if you are in this, if you do decide that you want to try this, it is a very fast getting pips, getting in, getting out. If you see that you have recrossed that 10, and you're going to get some fake signals if you get in on it too soon. If you see, and actually let's just take a look at this, because I'm thinking that this will probably come back down to here, because it looks like we're going to get a break of the 10, and we'll probably end up just sitting there for a while. And the reason that I think so is because we've gotten such a long run. So let's wait there for a minute and see what happens. Okay guys, this is exactly why I say wait, and I added an arrow while I had the video paused. But we're going to see where we go from this point, because I'm not expecting a whole lot but bounce around. So we'll wait a little while. Let's take a look at this on the hourly time frame as well. Okay, in less than an hour, the top of this candle is at 142.82, and it dropped down to 1 41.97. After you get a drop that big, chances are we're not going to drop a whole lot further, but we'll sit and we'll take a look. And the reason that I'm showing you this is to show you the importance of waiting between good trades. Once you get a good run, just say you're taking this on the hourly time frame and you're moving your stop losses accordingly. Now I move my stop losses, as you know, on the 5-minute time frame because I don't have this kind of patience. But if you're moving and you're moving after you get a good run on the hourly time frame, then you see what happened. You've moved that stop loss. Now you've gotten stopped out. It's the time to wait until the market shows you a new direction that it's going to take. And you can see even once it finds a new direction, look at what happens. So if you enter in right on that candle with your stop loss above here, you can see that stop loss is challenged, and it takes several hours before price resumes that same trend. For me, since I don't have the patience, I move my stop loss on the 5-minute time frame, because this is the thing. If I'm on the wrong side of the trade, I don't want the market eating into my pocket all day long. And people say, hey, your stop loss is too tight. No, it's not too tight. If I'm wrong, I like to know right away. Can't give them too much of my paper. Okay guys, let's go ahead and add another horizontal line here as our new level of support. And we are about 5 minutes from the new hour. But guys, I just wanted to show you that once you get a really good ride in the market, what you're gonna get is just this kind of choppy in and out kind of price action. Now we may break below that support coming from the next hour, but if we break it, chances are we're gonna bounce back up before we get a valid breakdown. It may or may not, or we may be done for the market day and it may be choppy. But the lesson here is once you get a good run, then go ahead and stay out of the market for a while, because this is what you're going to get. Okay guys, we're about to cut this video. We are 2 minutes into the new hour, and don't forget you're going to get this new hour bounce. You're welcome to follow this price action the rest of the day, but it has been a great trading day so far, as you can see. But I want to remind you, if you use this method, unless you are in a swinging market, the in on the 10, out on the 10 works the best in a swinging market if you're going to go in both directions. But if you have a market that is trending and that is strongly trending, and you can use your 5-minute time frame to determine that. But if you have a market that is trending, then you want to wait for opportunities to go in harmony with that trend, because these bounces a lot of times are tricked. And I know I said something before I paused the video that it sounded like an absolute. Let me say this: there are no absolutes in the market. There are no absolutes in the market. And a lot of times if you get in a situation where you have broke the previous day's support or resistance, then you oftentimes get a bounce. Usually, or let's say sometimes, but once you get a bounce, wait a little while. Or once you get the break, wait a little while to see what's going to happen with that bounce, whether or not you're going to bounce off because you are in a range bound market, or whether you're going to come back and re-break. Once you get that second re-break, then a lot of times you're in for a pretty good safe ride, as you see right here. But once you've gotten a good ride, try not to be too greedy, because then you're going to get this kind of situation where you're just kind of on a roller coaster ride for a little bit. So once you get a good ride, go do something else. Go have lunch or something like that. And I'm about to take lunch, and that's why this video is ending. But guys, you can absolutely do this. You can be successful at Forex. Have a terrific